All right, what's up, everybody? Let me know if you guys can hear us, because we are trying out a different audio setup. So just let me know, and yeah, let me know. All right, what about now? We're clear. Sound is good, I'd assume. Ba-da-da-da. I have the laptop tonight, so just let me fix my internet and we'll get started in a moment, everybody. Hopefully you all had a wonderful night and a wonderful day. Okay, I think we can go ahead and get started. Once again, apologize for being late, but it was quite busy. So thank you for understanding. Well, good evening, everybody, and welcome back to Walks in Wall Street. Today is Monday. It is August 5th. It is 2024, and it is the first trading day of the week, and the market started off with a bang, to say the least. Now, if we rewind all the way to last night, we had some real stress in the Asian markets. The Korean Kospi was down, and the Japanese stock market had its worst day since Black Monday. We'll talk about that. But what I first wanted to say is, if you go to my Twitter page, you could follow us at Walks Wall Street. One of the things that I like to do, it's an interesting exercise, when the markets are in turmoil, when we're seeing a major move to the downside, what I like to do is take a screen capture of my Twitter feed. So I'll read you the tweet. So here's my tweet from earlier today. I said, one thing I always do during a market down move, or during a major down move in a market, is take a screen recording of my feed on Twitter. It is a way better sentiment indicator than the Fear-Greed Index. I'm referring to CNN's Fear-Greed Index. I also save my texts, emails, and live chats, referring to this live stream. The most notable posts, I copy and paste on a chart of the S&P 500, or if it's a post about Bitcoin, I'll add it there, referring to a chart of Bitcoin. Lastly, I do the same for crazy, irrational bullish posts, such as that famous photo from NVIDIA a few months ago. Now, why do I do this and why did I tweet that today? Well, last night, and this is no joke, between the rhetoric on Twitter, that's number one, the amount of inbound text messages I've gotten, DMs on Twitter, emails, I'm going to say this is going to sound crazy, probably more than the 2020 COVID crash when the world was on fire. Some of the emails are just people concerned that, I know from like college and, family, what's going on in the market. Others are just unhinged people that probably, seen the live stream and they send me death threats and things like that. And I told you the market was going to implode. I told you the market was going to go down. You're leading everybody into a slaughter. You have no idea what you're talking about. You're a novice. You're a 20-something-year-old, blah, 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 all that nonsense. That is a very, very key sentiment indicator in the market. And I think that's very important to pay attention to, both bullish sentiment and negative sentiment. Now, in next week's, well, actually 2 weeks from now, Behind the Street newsletter, I'm actually going to be sharing with you guys that chart that I keep on the S&P 500. It's similar to the historical charts. If you go to, I forget the website, I'll link it in the description of the chat. There's a really, really nice detailed chart of the S&P 500 where they label every major market drawdown, from the 1987 stock market crash to September 11, 2001, the terrorist attacks, to the tantrum that we had in 2018, which we actually wrote about in the newsletter that I sent out Thursday, titled Merry Christmas 2018, when the market, and this is actually a photo of the S&P 500, when the market collapsed about 250 points as the Federal Reserve raised interest rates 25 basis points, and the market actually put in a bottom on this waterfall sell-off on Christmas Eve. So I'm going to be sharing that with you. Additionally, let's just address the overall markets now. Let me just pull up a chart of the S&P so we can see. Now, it appears that this sell-off, hold on, I'm just pulling up my chart. Okay, here we go. So this sell-off was really triggered by a major event happening in Asia. Japan had one of its worst, well, not one of the worst days, the worst day in history. And I tweeted something out, and as I was thinking about it, some major firm, some big hedge fund somewhere must have blown up. Because this was just action was straight down. We're actually almost recovered almost the entire move from yesterday. I think Japanese futures are up almost 10%, I think. So we've nearly almost erased the entire move from last night. But when you see something like that, where everything is limit down, limit down, limit down, some major bank, some major hedge fund, someone went under, and we'll probably find out as the week progresses. So watch for that news. I can bet you anything that on Thursday or Friday of this week, there's going to be a major headline saying that XYZ hedge fund totally liquidated. Someone had to unwind something for that to happen, and it most likely happened in the currency markets. Now, if we look at the S&P 500, guys, this looks like just a basic run-of-the-mill correction to the 200-day moving average, which is very, very common in bull markets. So this is when the market topped in 2021. We went through this massive bear market. This is probably one of the worst bear markets for growth tech in history. And we've been very, very extended, like we wrote about in the newsletter. This is the 200-day moving average, so you can imagine the extension from the 50. This quite possibly may just be a run-of-the-mill correction to the 200-day moving average, wait for the election nonsense to go over, and we resume our uptrend. At least that's what it's looking like to me. We'll cover a few more topics as we head through the night, but here is a chart of the NASDAQ 100. So this is the futures contract for the NASDAQ. We were aggressively extended from the 200-day. We had this massive liquidity flush down to the 200-day moving average on the NASDAQ. And it looks like futures are positive, maybe by 300 points, but you'll probably have some chopping action, maybe even revisit the lows. But for now, this just looks like a correction in a larger cyclical bull market. So let's go ahead and start the stream now, because it is getting quite late. But as a quick and final reminder, because what we wrote about in the Behind the Street newsletter on Thursday, again, if you haven't received it, go ahead and check your email. And if you want to sign up to receive all of our equity research every other Thursday, just scan the QR code on your screen right here, and it'll take you to our Substack. And I want you to scroll down about a third of the way down the page and really hone in and read this section titled Merry Christmas 2018. 'Twas a week before Christmas when Fed Chair Jerome Powell raised interest rates by 25 basis points and came off more hawkish than the market had anticipated. The talk on Wall Street was how the Federal Reserve was going to overdo it and tighten into a recession. Pictured above is the Christmas crash of 2018, where the S&P 500 had a major waterfall-style sell-off that bottomed on Christmas Eve. And you had a huge rally in the bond market, which is exactly what we're having now. Very, very similar action. I just wasn't expecting the market to fall apart this fast. So in conclusion, this is probably going to be the most important weekly close, how we close the week on Friday. And this is going to set us up for some really, really good opportunities. So let's go ahead and close up the laptop here. I'll say hello to everybody in the chat, and let's get started. Once again, apologies for being late. I know it's almost 10:30, but that's just life here in the big city. So thanks so much for joining, and let's get started. I usually leave the laptop at my office, but I thought since all the crazy market action, world is falling, I wanted to show you guys some charts. Hope you don't mind. So Shannon is here. What's up? I see Lance. I see Doc 7. I see Tom Barry. Good to see you. New England Crypto is here. Janice S. Cheers. Professor Dadillo. What's going on? Brad's Brain. Good to see you. Yeah, Sharon James, I saw that too. So if you pull up the live chat on YouTube on mobile, YouTube has rolled out a new AI summary tool, which is actually pretty good. It's not bad. It's not bad at all. So if you're just joining the chat and the viewers want to be filled in on what we're talking about, YouTube will actually give you an AI-generated summary of what we're talking about, which is pretty cool, pretty interesting. Now, the camera may be a little bit unstable tonight, just because we have a new microphone and it is a little heavy. Steph UF is here. What's going on? The LT Prod, Lisa. I see Tatted T, Emma, NBA Elias, TK Porsche. All right. Trying to debate on if we should head down Fifth Avenue. We might as well. This is the new Grand Army Plaza right here. Alan says the new mic is great on clarity. Yeah, it's, I really should upgrade the audio. I've gotten a barrage of emails about the poor audio quality here, and I get that. I totally understand. I really should invest in a mic. So going forward, we should not have any wild, wind noise that's terrible. So I apologize for that. Now we do have some notable earnings to quickly talk about. Palantir reported earnings today. Pretty decent earnings, and I think the stock actually popped after hours. Oh, look at this. This is what we were talking about. This is that Blade company, I think. Or maybe Blade is advertising, or maybe it's two different things. Blade is a subsidiary of Uber, and you could take a helicopter from the west side of Manhattan, Hudson River, to JFK for $99, I think. John, what's up? GNS says, Tom, I've been waiting to hear your take on today. I guess I wasn't really concerned, having dealt with 87 and 08. Yeah, I mean, there's a million different reasons, but I'll say this. When you see unwinding action like that, like we saw in Japan, usually that coincides with someone big blowing up. And when I mean someone big blowing up, I mean like a bank, a financial institution, a big hedge fund, because you just don't have moves that unwind like that. So I think, and we probably won't find out until later in the week because people are probably doing damage control. If you remember the Archegos fallout, we heard about that, I think 1 week to the day from when it actually happened, when the firm blew up. I bet you anything that when we do this live stream on Thursday and Friday, we're going to be talking about some breaking news about how some major hedge fund, and maybe even some of the big dogs that we talk about each and every night, how they went under, how they got caught on the wrong side of a currency trade and totally blew up their book, which is normal, and it happens. If you think about the LT management crisis, lots of people trading on leverage, lots of people speculating in currency markets, and that creates mispricings and that creates opportunity in the market. Now, additionally, the reason why I'm leaning towards someone major blowing up is the following. Go ahead and look at the VIX. I just put away my laptop. I wanted to show you guys that. I think that was the most important thing that I wanted to show you and I forgot. But go ahead and pull up a chart of the VIX. You don't have a vol spike of over 100% intraday unless someone's unwinding, unless someone's really, really blowing up, kind of like what you had during the COVID crash. I think the VIX eclipsed levels where it was during COVID-19. So now historically, we'll wait to cross the street here. Give me a second. Let me turn off my Wi-Fi. Now, historically, and as you all know, when you have those big blow-offs in the VIX like that, it's usually advantageous to, go short volatility. And those are signs where the worst of the market pullback is actually over. What a lot of people do, and I kind of noticed this on Twitter, a lot of people are like, oh my God, the S&P was down 3% today, okay? They're like, I'm gonna go short. And they go ahead and buy a bunch of put options. But the likelihood where you're gonna capitalize on that move is extremely unlikely, even if the asset price goes in your favor, because many people don't know how to price options. Many people don't know how to price derivatives. They don't understand what goes into it. And when you have volatility that expensive, you're going to be paying such a premium for your downside protection, where you're really going to need to make a huge, the market's really going to need to just fall apart for you to make any money. If anything, you'll probably lose money on the vol crush, right? If there's any derivatives traders out there, maybe you worked in a bank in equity exotics or pricing these derivatives, you kind of know exactly what I'm talking about. But just be very careful with that. When you see these huge explosion in volatility, that's not the time to be buying put options. I just quickly wanted to point this out and then we'll get right back into the market talk. East 56th Street and 5th Avenue. This NYPD police barrier, I think, will remain here forever. And I believe that they are going to be closing traffic forever on 56th Street due to the, unfortunate political environment we live in. So 56th Street is probably going to be deemed inoperable to vehicles. It's kind of wild, but it's true. All right, let me catch up on some of the comments here. Hey, Jamie Schmid, what's going on? Thanks so much for joining us. FredX, cheers. DC322 says it's permanent now. Doc7 says REIT News, Vornado reported earnings today, and I don't think they reported that good. I didn't even have a chance to look into their earnings report. But thank you for letting me know. I'll definitely look into that. Steve says, is anyone suspicious of the fact that all those trading sites and apps crashed and so many people couldn't access their accounts? Was anyone not able to access their account today? I wouldn't say it's suspicious, because you got to understand, and here's the reason why I don't think it's suspicious. I don't think there's any nefarious activity at play. The sites were probably overwhelmed, and what we were briefly talking about at the very, very beginning of the stream, the negative sentiment, I've never seen it like that, ever. In all of my years of investing, I've never seen negative sentiment like last night. On Twitter, people sending me emails, death threats. It was just wild. And I'm like, okay, this market is probably close to bottoming here. I've never seen fear like that. Eclipsing COVID, the fears. So if everyone is so freaked out and rushing to all of these sites to log in, to sell things, to buy options, to hedge, it's not super uncommon where a site would go down. Now, am I saying it's acceptable? No, it's not acceptable for the sites to go down. But I think Interactive Brokers was good all day. I have not had a problem with Interactive Brokers at all. I guess the question is, did anybody have issues with accessing their broker-dealer today? I didn't. Now, I didn't buy anything. The only thing I bought today was Bitcoin. I bought Bitcoin and I moved it to cold storage. I will say this, if we retest those lows of the S&P and the NASDAQ 100, I'll probably make a big long-term buy in my IRA, my retirement account. Now, there's two distinct things, right? I don't risk manage in my long-term retirement accounts where it's just indexed to the S&P 500. I have a few speculative bets on like startups, like new IPOs in there. But in my actively managed account, oh yeah, I hedge and I got blown out of a lot of stuff, as you can imagine, just automatically without even by my doing. With stops, I think I got blown out of most of my stuff. Most of my new positions that I've initiated over, let's say, the last 2 months, totally blown out on the open, just because the NASDAQ 100, I think, opened like 6% lower. So when you talk about beta, right, if you're in an individual stock, some of these individual stocks gap down 10%. So. This is the University Club, right here on East 54th Street. Now, I'll tell you why I made a pretty sizable purchase of Bitcoin on my account. The amount of liquidations, the amount of big guys being liquidated overnight was huge. And I still am kind of sticking to my thesis that someone big must have blown up in Japan. And a lot of times the reason why you have these waterfall style sell-offs is because firms have to meet their margin requirements. So if you're getting margin called, you have to sell other assets to post your margin. The problem is that's almost like, it's kind of like a self-fulfilling prophecy, because you have to sell more stuff, and then as everyone is selling more stuff, guess what happens? The market goes lower, selling pressure continues. That's why it's probably best not really to even do anything during times when the market is circuit breaker to the downside. But yeah, I think someone big blew up. I really, really do think someone very, very big blew up last night. And we won't hear about it until maybe Thursday or Friday. NBA Elias, what's up? This is the unwind, should end this week as money was raised in Japan at 0% interest rates and used to speculate in other parts of the world. That's all coming unplugged. Yeah, I mean, well, that's what rate traders do, right? There's an arbitrage there for sure. Yeah, that's another thing. Miami, walking, said Palantir earnings were stellar, accelerating growth, margin expansion just the beginning. It's the operating system of the future enterprise. Now, I still don't own any Palantir, but it is on the watch list. I didn't have enough time to do a deep dive into earnings. but it seems as if they posted a really, really great report. Additionally, I wanted to get some opinions, feedback here, thoughts. Geopolitically, you know what's a little bit concerning? Well, maybe not a little bit concerning, maybe a lot concerning. During the major, sell-off, right? Really the only asset, let's say a few handful of things that were really unchanged was number one, gold, right? Gold was down fractionally, but I'm not even going to count that because it was just pretty much unchanged. But a lot of the defense stocks did really, really well. Now there's rumors that Iran is going to, launch an attack on Israel that could potentially pull the U.S. into a potential third world war. I don't like to see defense stocks ramping. And to answer anyone's question, because I know the question is going to come, no, I don't buy defense stocks, and I don't think I ever will. I'm not saying it's a bad idea to buy defense stocks. It's just a moral thing for me. It just is uncomfortable. I guess we own them indirectly through an index, but I don't know. To me, it's just kind of sick to think like, there's going to be more bombings and shellings in the Middle East, and children are going to get exploded to death. And let me sit here in America and buy Lockheed Martin. It's just a little too gross. Again, it's just me. There's tons of other opportunities in the market. So I mainly use defense stocks as kind of like a sentiment indicator. But I don't, because I know those questions are coming. Oh, or do you own any defense stocks? I don't. I don't buy them individually. That's just my take though. Same thing with the tobacco and gambling stocks. I don't buy anything that has to do with like tobacco, alcohol, or gambling. This is the Warwick Hotel. And this is the Hilton flagship. Hang with Mark Baum. What's up? Welcome to 6th Avenue. And this is Steinway Tower, the skinniest residential apartment building in the world. Uh, 10 red buff. Oops, I should have put the chat on slow mode. This is Tom. Nuclear war is bad for business, but the fear of nuclear war is great for business. Hashtag sarcasm. You actually may be right. Now, in terms of the defense sector, right, we will spend a few minutes talking about it because that was one of the top performing sectors of the day. I am under the impression, and I do believe, that the entire world will go through a period, and is going through a period of rearming themselves. And that's just totally true. So it is good for them. I guess it's good for the, military industrial complex. Double Eagles, this is the catch-22. Defense stocks also sell equipment that saves lives. Totally 100% agree, but it's just for me, and again, I'm not saying it's bad, this is just my personal take. I don't put my beliefs on anyone else. There's just too much, I think it's more the catalyst, right? Because the catalyst is pretty obvious. In the news, in the journal, in Bloomberg, CNN, whatever publication you watch, tensions are really, really ramping in the Middle East. And when there was a pan sell-off globally, right, that really started in Japan, the only sector that actually had a good day, I'm not going to say performed better than others, actually had a good day, was a lot of the defense stocks, Lockheed Martin and the like. Kathleen says, how do you feel about gun manufacturer stocks? I would never buy one, not for a moral reason, but the TAM, there's no growth there, right? There's no growth, and it's very, very cyclical. When I think about a company that I'm going to invest in, one of the first things I think about is, okay, what is the TAM, or the total addressable market, right? If you look, and again, I don't want to get political, I respect everyone's political beliefs, but in the United States and around the world, governments are cracking down on citizens being able to own weapons. That's a declining industry, okay? That is, by definition, a declining industry, a dwindling TAM. I want to invest in a business that's scalable, that has ridiculous hyper scalability, like Amazon, like the Microsofts of the world, Alphabet, Google, social networks, kind of like a Metcalfe's Law type of thing, if anyone's heard of Metcalfe's Law. So that's kind of where you're going to get the big returns, in my view. Yeah, maybe for like a short-term trade, but long-term, they don't have predictable and scalable businesses. There's no reoccurring revenue there. The margins are very, very volatile. It's very commodities dependent. But like a tech company, like a cloud computing or advertising business, or a business that runs on SaaS, like a subscription as a service, where you're ringing the register every single month, those are more insulated businesses because the predictability of those businesses are very, very high, right? And this is why a lot of times, and we're back on Billionaires Row, look at how nice the paved road looks here. And here's a good view of the Steinway Tower. But also think about it like this, and I always give this example. If you ever notice the big winners, or the stocks that during a bull market go through the biggest price increases, right, on a percent basis, you'll notice something about them. They're always extremely, extremely expensive, or what some people would like to call overvalued. And that's because those type of stocks go through a huge multiple expansion because of their predictable business models, right? If you're, let's say, doing $1 billion ARR, right, stands for annual recurring revenue, but you're growing at 20% per annum on 60% margins, well, then it's just a simple calculation. You plug and chug the numbers into a simple DCF model, and you're willing to pay a multiple for those predictable and strong earnings. More simply put, some stocks or some companies are cheap for a reason, and other companies are expensive for a reason, right? You're not just going to walk into a Rolex dealer and be able to buy a Rolex for $1,000, right? Things are expensive for a reason, and in the market, it's the predictability of earnings growth, the predictability of free cash flow growth, and the strength of the power thereof. What multiple are they growing at in terms of their revenue growth, earnings growth, margin growth, things like that. I want to take a quick pit stop on West 58th Street because I want to see if the doors are open at the Steinway Tower. Hey, KM Ramsey, what's up? Good to see you. All right, we're now on West 58th Street. You're looking at 220 Central Park South. AI Bob says, hola Tom, the yen carry trade is over even though the dollar gains small amount today. Do you think, here's one thing I'll say about the yen carry trade. 99.9% of the people on Twitter, social media, whatever, that's keeps ramming and harping about this yen carry trade has never heard of it before yesterday. And that's the truth. including, and I'm not trying to be like a dick, but it seems like we have an unlimited amount of experts on foreign exchange desks in Japan. The yen carry trade and currency, there's arb opportunities in every market. Sometimes you just get caught off sides, and what's really exacerbated that is actually the Bank of Japan, but that goes back many years. And Japan's, which I actually think is in the process of being fixed in a major way. And I think in Japan, we come out of this way better than people are expecting right now. I actually think over the next few years, Japan's gonna outperform some major indices due to their changed stance on immigration, in my view. But yeah, I'm still sticking by the case that somebody big, and we're probably gonna find this out maybe Thursday or Friday, blew up because they were caught way off sides on a big currency bet, and they had to liquidate tons and tons of stock to cover their margin requirements. That's really what I think happened. And it may not be over. Sometimes when these big firms blow up, it could take a week. I mean, think about what happened with Archegos management. Guys, this is the inside of 111 West 57th Street. Beautiful in here, and you wouldn't even really know it's here. This is one of the most expensive apartment buildings in the entire world, and you're looking right into their valet. You can see that big car elevator to the left. But from the outside, you would just think this is any other random building, and that's kind of the exclusivity of a lot of these buildings on Billionaires Row. I was hoping they would have the garage door open tonight so I could kind of show you guys and just do a quick walk around the inside, but we'll see. All right, let me catch up on some of the comments here. I usually like to leave my bag at home so I can navigate the chat a little bit easier. But this is 58th Street. MBA Elias says, Tom, according to X, everyone became a Japanese currency expert overnight. No, for sure. And I'm obviously being a little bit, joking around a little bit, but there's also this, right? If you look at, and we'll talk about the US markets because it's all intertwined. We'll go back to talking about the major move in the VIX, CBOE Volatility Index. You just don't have a blow off in the VIX like that on a nothing, right? I think it was like 110% or 100% move overnight in the VIX. A higher percentage-based move than during the COVID pandemic when literally the global economy shut down. Let's think about that just for a second. I'll say that one more time. We had a bigger move in the VIX yesterday than what we had when the entire global economy shut down and we didn't know if it was ever going to open back up ever. I really just want people to think about that for a second. Okay. So not to just keep repeating myself, but it's either a bank blew up, someone went to zero over the weekend. Probably a big trading desk in Singapore or Japan or Korea, or maybe here in the United States that had a lot of gross exposure to lots of currency exposure. And they probably had to sell almost everything, market sell everything. Stocks, US equities, European equities, and I think that's what exacerbated the sell-off like that. I mean, you just don't have an unwind like that on a nothing. Additionally, Flash crashes like that have been happening forever, and there's going to be more that happen. We had the 1987 stock market panic. You had that little flash crash on 9/11, 2018. So this is all within the realm of possibility. This is Alwyn Court right here. The LT prods is when will we know? I don't know. Maybe somebody didn't blow up. But if I had to put money on it, it's probably going to be like an Archegos times 10 that comes out. We could also put it this way. I think at one point, Japan was down 12% or 13% in a day. So it's almost a 100% possibility that someone must have blown up. Either a big pension fund, someone that exacerbated the sell-off. And I think it's already created opportunity, major opportunity. For some technical levels, if you look at the S&P 500 right now, and if you look at the NASDAQ 100, I don't really look at the Dow so much. I don't think the Dow is a good representation of anything, really. It's 30 stocks. I think what's more representative, broad-based, of the US market as a whole is probably the NASDAQ 100. Very high beta. We're sitting right at the 200-day. In a cyclical bull market, you on average have 3 pullbacks to the 200-day through a big bull cycle. And that usually corroborates with about a 15 to 17% pullback in the market, right? Because if you think at any given time an index is trading 5 to 6% above the 50, quick maths, it usually means you're trading somewhere like 20%-ish above the 200-day, right? And we've come down right to the 200. It's not to say that we can't break below. Usually after a big liquidity event or liquidation event that we had, you usually get these snapback, like roaring, screaming rallies the next day as people kind of figure things out, as algos are being reworked, as people are kind of, unwinding hedges and the like. So it is quite possible, and there's actually a very, very high probability, that this is just a correction to the 200-day. But this time we got there in 2 days. We got there in 2 days than the usual, 2 or 3 week correction to the 200. All right, now we're looking at 1 Central Park West, headed into Columbus Circle. AI bombs is how did Buffett get it right, selling Apple, or selling half of Apple, and raising cash. I think that story is, the press and the media are really playing up that story, and I think are being a little bit dishonest about it. And we've talked about it yesterday, and I guess we'll cover it again. Now the headline, oh, this thing is kind of cool, look at that. Now the headline that's in question is Warren Buffett sold 60%, I think it was more than half, I think it was like 60% of his Apple holdings because he thinks the global economy is going to fall apart and we're going to go into this big bear market. And I'm not a mind reader, I don't think anybody is, but I do know a thing or two about portfolio management, okay? And if you look at where Berkshire Hathaway acquired their equity stake in Apple, it was roughly, I think, like a $350 billion or a $400 billion valuation. I think. You could just Google it and look it up. So if you have a whopper, earth-shaking position in a company, right, at a let's just say it was a $500 billion valuation, right, just to round up. and you ride that all the way to Apple's most recent $3 trillion valuation, you not only made an ungodly amount of money, but Apple is now a significant portion of your portfolio on a percentage basis. So you sell down and you take profits and you raise cash on a earth shaker, arguably, one of the greatest trades of this decade, right? Acquiring a major stake in a company at a $450 billion valuation and riding it to a $3 trillion valuation. It's pretty wild. So people sell just because people sell. Oh, someone says we have no sound. Hold on. Sorry about that. Let me do some troubleshooting. We did get a new mic, so bear with me on the audio. I may need to reset something. Oh, we're good? We'll figure it out.
No, it's fucking good.
But anyway, it is possible, right? Again, not being a mind reader, it is possible that maybe Warren Buffett liquidated almost his entire Apple stake because he thinks, we're going to go into a global recession. Maybe, but it's probably more likely that you sell down a significant winner in the portfolio when you've rid it, or when you rode that position from roughly 500 billion, excuse me, 500 billion to 3 trillion, when you're starting to see a little bit of slowing in terms of revenue growth in Apple. That's probably a normal, if I was the PM, I'd be like, yeah, you're starting to see some slowing. We're going into an election cycle where we don't know if there's going to be significant changes to corporate tax rates. We don't know if there's going to be significant changes to capital gains rates, by the way. So yeah, I'd probably sell down some of that too. And everybody is, right? Everyone is really raising cash right now, which historically, and we've also spoke about this. If you want to see the data that I'm referencing, if you scan the QR code on your screen, punch in your email, it'll take us to our free Substack, our Behind the Street newsletter. Q3 is usually, and I'm talking about during election years, and you could look at this data, I posted it in the newsletter, but if you look at S&P performance in Q3 during election years, it's usually the worst quarter, which makes sense. And Q1 and Q2 are historically the best quarters, which that's actually played out. A lot of people don't like to talk about it, particularly if it's like a right-leaning publication. But in 2024, Q1 and Q2 were some of the best on record for performance in the S&P 500 under the Biden-Harris administration, right? Whether people like it or not, you're not going to see that on Fox News. And I'm a conservative, but that's the truth. Historically, Q3 is the worst, right, going into an election cycle. And then once you have the election, and assuming there's nothing, super crazy, you actually have a very nice rally into Q4, like a Santa Claus style rally. Guys, check this out. This is a beautiful view of Columbus Circle and Billionaires Row. You have 432 Park Avenue here. You have Steinway Tower, 157, 220 Central Park South, and Central Park Tower. Beautiful views here. All right, let me get the QR code off. But yeah, we publish all of our free equity research every other Thursday. If you want it, just scan the QR code on your screen, punch in your email, and that is our Substack. And we just sent it out on Thursday. Hey, Joe E, what's up? Good to see you. But now that we kind of covered, we covered what happened in Japan, we covered what happened in Korea, right? The Korean Kospi also got wrecked. I think that was down almost as much as Japan was down, or maybe even a little more. I gotta see. Obviously, Korean markets aren't covered as widely as Japan, for obvious reasons. But I think it's time to be fair and play a little bit of devil's advocate, right? Because we kind of know my side of the story, but I think let's just for fun cover the other side. Now my side is that this is a correction in a larger bull cycle, but let's just now and this is kind of what I wanted to spend the second half of the live stream on, because it's always good to hear other points of view and play devil's advocate so we can position our portfolio appropriately. So let's for a second, turn our brains 180 and look at the data that supports a pretty deep recession in the US. So we just got the US PMI numbers out. If you type exclamation point ISM, I believe, or exclamation point PMI in the chat, the Nightbot will take you to the Institute for Supply Management PMI numbers. So the manufacturing numbers for last month. And there's no doubt that's really, really signaling a slowdown. Now, I want you to navigate to the most recent PMI number. So for those of you who don't know, just a quick little synopsis of it. On the first business day, okay, the first business day of every single month, the Institute for Supply Management releases their manufacturing report on business, which is essentially, it's a survey, right, where they survey manufacturers in the United States and they ask them a series of questions on the business. If they see, new orders increasing, if they see new orders decreasing, they ask them about inventories, they ask them about demand, sales, all of that. And I want you to go to the report and scroll down to the part where it says what respondents are saying. I think I tweeted this out. I gave a little screen capture of it. But the vast majority of respondents to the last or the most recent manufacturing report on business, I want you to count how many times the word slowing, and there was one other negative description, is used. Anyway, there was a lot of talk from manufacturers in the United States that things are slowing quite significantly in the manufacturing sector. You see inventories dwindling, you see inventories, a huge backlog of inventories. You see new orders dwindling. Sorry, that's what I meant to say. And usually, right, assuming that the reason why we look at the PMI number is the following. There's a high correlation to GDP growth in America. It's roughly 70%. So when the ISM PMI numbers are increasing and headed northbound, right, signaling expansion in the manufacturing sector of the US economy, there's a 70% likelihood that 6 months later, we'll get a positive GDP print. Now, why does that matter? Well, the next step is that another 70 to 75% of the time, when we get positive GDP prints, the S&P 500 is higher 6 months later. You see what I mean? So these are leading economic indicators. We just got a GDP print, which was better than expected. But if what they're saying is correct, maybe we do go into recession. What are some of the things that are best to own in a recession? Does anyone know, like, the top performing sectors? This is 15 Central Park West. This is one of my favorite buildings. Hey, REN, what's up? AI Bob says banks, Jesse says metals. Usually, I was going for utilities, but usually utilities perform really well. MD gets it. Yeah. MD and Chloe. Yeah, utilities perform really well. Now, I don't have my other phone on me. Well, I do, but it's dead. Does anyone know what utilities did today? Out of curiosity. And metals, that's true. Bonds, that's true too. Guys, look at this. This is the courtyard at 15 Central Park West. Beautiful. LT Prods is Church and Dwight, CHD. But anyway, it's usually cyclicals and it's usually utilities. And one argument for the recession is that massive move into utilities over the last week. Sharon James says, wow, is this a hotel? No, this is 15 Central Park West. This is one of the most sought after condos in all of New York City. And there's a lot of major Wall Street titans, both guys and girls that live here. The former CEO of Goldman Sachs, Lloyd Blankfein, he lives here. And also a lot of private equity people. M House's XLU is down today. On what percent basis? I know everything was pretty much down today, but generally speaking, going into a recession, utilities perform really well, like electric, power. I mean, you still need to pay your electric bill. You still need to heat your house. But look at the great views that you get here. Yeah, Colton Manning's is so the basics. Yeah, so another one that the LT Prod mentioned. Usually when you see sectors that are outperforming the market, well, let's say a company like Church and Dwight, right? The ticker symbol is CHD, Church and Dwight. If that is really ramping and headed into new highs, I mean, they sell, that's like what, Arm & Hammer, they sell baking soda, toothpaste. So if you have the market participants crowding into a company that sells like toilet paper, baking soda, toothpaste, you know that overall market sentiment is not to be, speculating on tech stocks or startups, right? So you can kind of use it as, where is the smart money kind of hiding out? Is it a risk-on environment? Is it a risk-off environment? Things like that. David Mann X's utility was down almost 3% today. Industrials was the best sector in the US. So the triple Qs, like a NASDAQ 100, was what, down over 3%? Road Dog 41 says, how come you left the topic? Just asking. What topic? Left which topic? Which topic would you like to talk about? Nicholas says, yo, Thom, how's your money doing? You said you bought Bitcoin. I did buy that today. All right, here's the main entrance to 1 Central Park West. And now let's go ahead and head downtown. Road Dog says electric company. We were just talking about utilities. The topic was, we were speaking about the major market correction today, and now we're playing devil's advocate saying, assuming we go into a major recession, what are the sectors that usually outperform the market? We were talking about utilities, like power companies, electric companies, those are usually the sectors that outperform. And if you look at a chart of the ETF, the XLU, right, utilities, the XLU is ramping and outperforming other sectors of the market. What else do you want me to say? Is there a specific stock you want to cover or talk about? All right. Let's head into the park. We never go into the park. We'll do a quick lap through the park. MDs, the Fed needs to hold steady. That's a good point. I was speaking with a friend today, and he usually holds different views than I do. And you know what he said today? He's like, you saw all these pundits today on CNBC. Anybody see that rat that just ran across? All the, the talking heads on CNBC, Bloomberg today. It's like everyone was calling for.
What's up, man?
Hey, what's up?
Cool, bro.
What's up, man? It's like everyone was talking about how the Fed needs to do an emergency rate cut. One of which I think was a Yale professor that said the Fed needs to come out here and quickly slash interest rates by 75 basis points. I think if they did that, that would stoke more fear in the market. And to MD's point, I think they need to hold steady for now and just wait till the next meeting. If they see a little wiggle in the market, right, a little decline in the market, and everyone freaks out, and then the Fed goes and does an emergency cut, that's not going to look good. That doesn't necessarily instill confidence in the market. Additionally, you can't cry foul. And I think people are way overblowing, freaking out about this liquidation event over the past 2 days. It's like you should see some of the sentiment out there. It's like the United States got nuked by Russia or something. I mean, people are freaking out. The markets go up and the markets go down. We just hit a new all-time record high on the NASDAQ and the S&P 500 4 days ago, right? 4 trading days ago. Or, excuse me, not 4 trading days ago. I think it was like a little over a week and a half ago. You get the point. So for every money manager or every economist to say, see, the Fed is terrible, the Fed got it wrong, you have to cut, do it right now and freak out. No, that's going to signal more incompetence that, oh, the Fed is incompetent, and if we just pout and, post a couple tweets on Twitter, we're going to get what we want. It's not, I think that's a big no, in my view. But there is no doubt that the market right now is interpreting that the Fed made a policy error, that the Fed made a policy error. That's my view. Pre-drag PESIC. This cut is expected in September. I believe that is right. If you type exclamation point CME in the chat, once again, exclamation point CME in the chat, the Nightbot will drop the link to the Fed Funds Futures tool, where it'll give you the percentage of the probabilities of a rate cut or a rate hike at the next meeting. And I think it's damn near 90% now, particularly after what happened yesterday. So exclamation point CME. The link should be CME group /Fed watch tool. And if you save that as your favorites, you can look at the futures market. You could look at the futures market and look at those probabilities. This guy's a nice Vespa. Speaking of rate cuts, this is also something to ponder over here. Now, as we know, there's been this massive bum rush into bonds, right? the 30-year bond, the 10-year bond, just they're pretty much, really the long end of the curve is really being bid up, and yields have been coming down in a major way. There's a high correlation between the 10-year US Treasury, right, and 30-year mortgage rates, or 30-year fixed rate mortgages. If you continue, like my take is this, and which is what I don't think will happen, but it's good to just talk about it, play devil's advocate. If you continue to see a major market sell-off like we had yesterday, continue for the next few days, which I don't think it will, but if it does, and rates continue to come down and plummet, yeah, the average 30-year fixed rate mortgage, you may be able to get it for like 5%, but there's no guarantee that banks will actually feel comfortable lending you any money in an event like that. So I think that's another thing that people need to understand, which I don't think will happen. But when you have these such brash and swift movements, these collapses, banks aren't necessarily, banks are smart, right? They're good risk managers and they're very good underwriters. I'd say post-2008, they're good underwriters. Maybe not so much pre-2008. They're not just going to go hand out cash willy-nilly if the economy is plunging into recession. That's kind of one thing that is good to keep in mind. Hey, Montley Lou, good to see you. Trust you're well. Yeah, Doc 7 TLT is having, I think, one of its best weeks in history. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. Also, let me know how the audio is, because we do have a new mic we're testing out tonight. We're doing some testing on a new audio solution. And let me know how it is. Can you still hear the background noise of the city? Does it mitigate the wind noise? Hey, Hawaii, what's up? Good to see you. Zozo Bob says, when am I going to be back in Miami? It's looking like I should be back in the 305 in your neck of the woods. Maybe Monday or Tuesday. Now, the reason why I didn't fly back to Miami this week, well, I should say this weekend, is because of the crazy storms. And there was so many flight cancellations, there was so many delays at Miami International. It's looking like, thank God that I didn't do that. So hopefully there's gonna be no more rainstorms by next week, and I'll be able to fly to Miami, do what I have to do with the, whatever it's called, the tenants, and then I have to go to Asia. Joseph Hardaway says, yeah, we still hear the background noise, but not the wind, which is good. TK Porsche says the background noise is much lower now, but still audible. Well, that's good. Just as long as we don't have the wind noise, I think it's good. Paul McNeely, yeah. Japan is now up 10% today. So we pretty much paired almost a little more than half the loss. That's another reason why I really do believe that someone major blew up, and we'll find out a little later in the week. But it's also, when some people will say, oh, this is a bear market rally, okay, maybe it is. We'll play devil's advocate on both, we'll explore both angles. But when you see a market bottoming, and this is why it's so important, and I'm so glad that I included this in the newsletter last week, because it's a perfect visual of what happened in 2018. When you have a really, really massive waterfall sell-off like we did yesterday, and the next day the market doesn't rally in a major way, I'm talking like rip-roaring rally, that is bad news. That's like, look out below, this thing's about to fall apart. When you see major buy volume, and it has to be like 300% ADU, which stands for average daily volume. When you have like that 300% average daily volume after a major sell-off, like thunderous cash pouring into the equity market, that's usually a bottom signal. And if you don't believe me, in the next newsletter we're going to do a complete breakdown on this, but I wrote about it. If you look at the VIX, we had the exact action that you want to see in volatility, with the VIX blowing off. That's number one. And number two, you want to see like a rocking rally off the bottom. Now, it's not guaranteed that we get that tomorrow in the United States. It's looking like we may get a little bit of a bounce tomorrow in the US. I think futures are up like 1 or 2%. But that's kind of what you want to see. This is West 53rd Street. We're outside of the Sheraton, New York. But what I would also say is, if you're a poor, you really can't buy this stuff, and we don't give advice, but you really can't buy this stuff below the 200-day. So if you're like trying to bottom fish and scrape a stock that's been blasted and it's sitting, it's been living below the 200-day, you want to try to look for the individual stocks that have held up better during a major market correction. And you really want to trade within the trend of the market. But, for, let's say, your retirement account, like my retirement that's indexed to the S&P, and I'm 29 years old, and please God, I make it to 70, right, when I can pull the money out. On major down days, it's probably a good idea to, get some exposure on. Doesn't mean the market will bottom that day, but I would rather make slam down big money on the US when you have circuit breakers going to the downside than circuit breakers to the upside. This is the French investment bank, BNP Paribas. Clarence Jackson's, this is, do you think Bitcoin will return to 60,000 soon? Do you think we're at the bottom of the stock sell-off? Well, and I posted this on Twitter today. I think the truthful answer is no one knows. I don't know. Buffett doesn't know. We're not God. But I did only buy one thing today. I didn't buy any stocks, but I had my buy orders set on Bitcoin. I actually did buy Bitcoin and just moving it to cold storage. And the reason why I bought Bitcoin is because we had almost a record amount of liquidations of Bitcoin and cryptocurrency holders last night. More so than what you had when like 3 Arrows Capital blew up. So I don't trade Bitcoin, I collect it. I just accumulate and accumulate and accumulate. And when you have those major sell-offs like that, yeah, I'm gonna step in there, buy it, and then move it off exchange to a cold storage wallet, of course. Now, does it mean that Bitcoin's not gonna go lower? No, of course not. But that's the only thing that I bought today. If this market, if we have a rally and then we roll over and sell off and retest the 200, I'll probably make a sizable purchase in my IRA, in my retirement account, just on the S&P. With my actively managed portfolio, right, that I actively manage, most of my positions that I initiated over the last 3 months, I was totally blown out of them. I mean, obviously, and that's good. I mean, yeah, you lose money, but you live to see another day. That's, portfolio management. When I'm actively managing my my funds, almost 100% of my new positions that I initiated over like 3 months, most of them are totally blown out. I have some of my core stuff that I had to let go a little bit, but I am 100% willing to buy that back at higher prices on the next follow-through day. So that's kind of how I feel about the market. So those are kind of the two ways that I invest money. Actively managing, risk manage. I can't afford big drawdowns there. So I risk manage, like running a hedge fund. And my long-term retirement account, I do not risk manage. And I make very big purchases when you have these big sell-offs. And hopefully the market stays down over the next 2 weeks. I'm supposed to get paid on a deal, and I'll probably transfer that to my IRA and buy all of it, or put all of the check into the S&P. Because here's the bet, right? I'm 29 years old right now. When I can access the money, what age can you access it from an IRA? Like 71? I think the US economy and US companies are going to be generating probably triple the amount of earnings when I'm 70 years old. So, of course, yeah, if I'm going to buy the S&P in a bear market. Now that bet could be wrong, right? The US economy could be dethroned as the best economy in the world. We could go through a depression. But then if that happens, everyone's in the same boat. I don't think that's going to happen. I think you'll see higher earnings growth over time in the US as capital makes its way out of China, out of places like Eastern Europe, particularly out of the UK. And over time, you'll see more capital creation in the US and more earnings power in the US. That's kind of my take on the situation. Jay says, will you stake your Bitcoin and live off passive income? Absolutely not. I would never, ever in a million years think about giving any exchange my Bitcoin. It's in a cold storage wallet, well, multiple, and I don't look at it. I just collect, and that's it. That's not to say you shouldn't do it. It's just I don't. But what do you guys think? I think now that you know my take, I'm more curious on your take. What are your thoughts? Hey, Dale, thank you so much for joining. Have a wonderful night. Appreciate you. And hopefully we'll see you tomorrow. Okay, about staking, I'll just tell you a quick story. We'll do a quick story about staking, and then we'll move on. So this guy that I know since like 2014, 2015, he's actually like a young kid. He's like 33 years old. He became one of those Bitcoin multi-decamillionaires. I still keep in touch with him. And when we had that big bear market, if you remember when a lot of those firms blew up, like even Gemini staking went down. Well, let's just say this.
Let's say by 50%.
He had millions to the tens of millions staking his coins on these exchanges that were offering 7% APY or 7% interest rate, ridiculous levels. And all of that went to zero. So I stay away from all of that. I don't tell people what to do with their money, but particularly in the crypto world, a lot of those staking and lending schemes are exactly that, schemes. in scams. So I know people who lost over 15 mil plus doing that. And the thing is, like, dude, if you're worth that much, why do you need to take so much risk like that? You don't need to throw Hail Marys. I mean, if you're worth 20 mil and you have, I mean, dude, it's just crazy. So there's a lot of schemes and scams, which it's good that they're being flushed out. That's very good for the ecosystem overall. But the way I view Bitcoin, and the only reason why, and we've talked about this before, that I have an allocation to Bitcoin and will continue to do so, is because it's the only asset class on this earth, right, that is truly unconfiscatable. So what does unconfiscatable mean? Well, it means that if you have your private keys, you have complete ownership over your quote-unquote money. I won't even use the term money, I'll use value. So to me, I think that deserves at least, and for me, I'm not talking about anybody else, I think it deserves at least a 1 to 2, even I would say a 5% allocation into someone's portfolio as like a hedge to a major fallout to something, right? My Bitcoin could be sent halfway around the world, no permissions, right? I don't have to have Jamie Dimon approve the wire transfer. I don't have to talk to some banker asking me why am I sending this money somewhere. It's truly the only thing that's unconfiscatable and permissionless. That's the value that I see. Okay, I don't care if it goes to $1 trillion, 100 million. I don't care if it goes to 20,000 and never moves from 20,000. The value, again, that I see in it is it's permissionless and it's unconfiscatable. Those are really the two main properties that I see value in. Now, if you don't see value in that, then you probably shouldn't buy it. Don't buy it, don't look at it. But for me, in this crazy world we live in, to have, maybe 5% of your net worth in something that's just purely permissionless, unconfiscatable, I think that's probably a good idea. What I like to call it is a phenomenal risk-adjusted bet. Because let's say worst case scenario, this is St. Patrick's Cathedral, by the way. Let's say worst case scenario that Bitcoin goes to zero and it ceases to exist. Okay, well then I take a 5% hit on my overall net worth. I'm not going to be in the poorhouse. I'm going to be able to recover from that. But if Bitcoin eats about $10 trillion worth of market value, or I should say sucks about $10 trillion worth of market value away from some of these other asset classes like gold, fixed income, and the like, well, I'm going to be feeling quite well off of a 5% risk of my net worth. Not only will I be feeling quite well, it'll still have those properties and principles in case of an emergency. Unconfiscatable, I can send it to anyone. If I know someone that's overseas that's in a bind, I could send them any amount of money. AI Bob says, Tom, don't you still pay taxes on Bitcoins you sell? Of course. Yeah, I think that's another kind of misconception. Many people think that, I'll buy Bitcoin to evade taxes. No. You have to pay your taxes on everything regardless. Okay, well, this isn't a tax evasion scheme. You should always pay your taxes. And by the way, for people that make the argument that Bitcoin is great for tax evasion, it's actually the worst thing for tax evasion because the government knows every single Bitcoin, where it's at, who you sent it to, in what amount you sent it, at what time and location. It's the blockchain. It's an immutable thing. So if anything, it's like the worst product of all time for tax evasion and trying to skirt the government because there's no hiding. There's no changing the blockchain. Every single transaction that's sent is recorded on the Bitcoin blockchain forever. It will never be changed. It's impossible. So that's why I don't really understand that. When people say only criminals and things like that use Bitcoin, If I was a criminal, I would not, well, I'm not a criminal, so I wouldn't know, but I would rather deal in just cash, unless you're like some cyber criminal. Such a pretty building here. Let's check out Madison Avenue. Sharon says, yeah, I guess it's hard to money launder crypto or any money sent digitally. I wouldn't say it's hard, I would say it's unwise, right? Because it's easily trackable. The most nefarious activity and crime is done using the US dollar. Now that's also a little bit of like a cheeky argument because it's quite obvious, because most transactions, right, the vast majority of transactions by percentage basis, people use US dollars, but I think in terms of just the overall volume. This is the Omni Berkshire. Hey, Emma's here, what's up? Good to see you. The LT Prod says everything we do electronically leaves a digital footprint. I agree. I think nowadays, and maybe some people would disagree, I mean, who's heard of the big headlines now that people are against like a digital dollar, a digital currency? There's many people that are against that. Number one, we already have a digital dollar. The vast majority of transactions are done digitally. But here's the thing, many people don't want that because they don't want the government to be able to interfere in their lives. They don't want the government to be able to, shut down your money and turn off your bank accounts. To which I say the government can already do that now. Like if we don't think the most powerful government in the world that runs the most powerful military that the world has ever seen can't make a phone call to Jamie Dimon and say, hey, shut this guy down? Really? Come on. Of course they can. The government has the technology to probably siphon money out of your bank account. In fact, I know they do, right? So the way I kind of think about it and the way I reframe it is, do we think that the world is going to fall into Mad Max? Now, if the answer is yes, then okay, fair. But I don't think so. I don't think the US is going to fall into Mad Max. I don't think it's going to be like everyone is out to get one another, nefarious activity. I don't think it's going to happen. I think the structure of our government with separation of powers and the Constitution was designed so perfectly to kind of prevent that. And if the government hasn't, shut down our bank accounts and told us what we can or can't buy yet, because they do have the authority, they do have the power, and they do have the technology to do so. It's quite obvious. The way I think about it is, I remember the first time I saw that video of the United States, I think it was Green Berets or something. It was like the US military, they found Saddam Hussein. Does anybody remember that? They were able to find Saddam Hussein in this, literally, the hole in the ground was smaller than this little rectangle right here. I want you to think about that for a minute. The US government, our intelligence agencies, and our military was able to find a guy on the other side of the world in a little teeny manhole. So you don't think the government could shut down your banking infrastructure to a person who lives and works in the United States right now? Of course they can. I mean, our intelligence agencies and the government knows everything that we spend our money on. They know what our conversations are. And I'm not saying that's a good thing. I'm just stating it as a fact. Many people like to think that the government doesn't have access to our phone records. They do. The government knows who we text. They know what we text about. They know what our phone calls are. They know everything. It's quite blaringly obvious. Again, you could agree with that. You could disagree with that take, but that's my honest take. The government already knows everything about us. Speaking of Jamie Dimon, this is 270 Park Avenue. This is the brand new JP Morgan Chase office tower that is now topped out. Now, does anyone disagree? Because I don't like to be surrounded by, people that disagree all the time, but I don't know, I feel as if, just think about all the technology and intelligence that we have. Our technology is so advanced. Like, how could the government not know everything about us already? That's a really good point. NBA Elias, credit card companies know about every single purchase that you've ever made. And that's so important. I mean, imagine how valuable that data is. Park Avenue is so quiet at night. Wow, Dwayne says, I used to know a guy that said in the early 1930s, a teacher said one day there'll be cameras in the sky watching us. The class laughed. Yeah, quite literally now. I mean, just think about Google Maps, just think about Apple Maps. They have the technology to canvas every single inch of the earth, and you could zoom in with such clear detail on any city, on any street in America, on any street in the world. So you don't think the government or the military has technology to run a satellite and be able to get such clear detail? There's probably satellites technology we don't know about right now where the zoom is so good that you could be in outer space and you could, have clear visuals and read someone's text messages as they're walking down the street. I mean, you can't convince me we don't have that technology already. That's totally... There's probably some very, very high-powered surveillance camera. Now, going back to the point NBA Elias made about credit cards, it's good and it's bad, right? We can find trade-offs of this. Because your credit card company, has anyone ran into the problem, let's say you were overseas, right? Or let's say you're buying something on your credit card that you usually don't buy, and the transaction gets declined. The reason why it gets declined is because your credit card company knows everything about your spending habits. They're like, wow, Thomas usually doesn't buy TVs in North Dakota, or wow, he usually doesn't spend this much money on this. And then they call you and say, hey, we know everything about you. Well, they don't literally say that, but if you wanted to be very blunt, the call quite literally is, hey, we monitor all of your spending data. We know all of your habits. You're doing something outside of your norm. Is this really you? Like, think about that for a second. That's how they do it. Which is good, right? Because we don't, that can combat fraud. You don't want that transaction going through. Then you have to fight the transaction. But it also works as a double-edged sword when we're talking about privacy. Got yours. We have so many cameras everywhere. The power is to use all the cameras everywhere to continuously track where we are. I mean, unless you're Jeffrey Epstein, and then the cameras mysteriously don't work. Ed Dunkel, so that's why I buy my beer using cash. Funny. That's actually interesting. Do you think that credit card companies monitor your spend, or if you buy a lot of cigarettes and you buy a lot of alcohol, they ding your credit score? All right, I may have to go back and edit out that Jeffrey Epstein comment. Let me make a mental note of that. Here's my favorite building in New York City. Well, I should say favorite office building. Seagram Building. Hey, room C, what's up? Yeah, interesting day indeed. Hope you're well. We just got done breaking it down. I think in jest, I think someone big blew up. I think some big firm or some big fund. And we'll probably learn about it Thursday or Friday. My prediction is it's like an Archegos times maybe 7 or 8. Someone unwound. All right, everyone. Well, it's getting late. I think it's almost midnight. So if you enjoyed the stream, feel free to leave a like on the video. Click the subscribe button if you're new. And we will see all of you right back here tomorrow. There's a lot to break down, a lot to talk about. If you like our financial conversations, feel free to scan the QR code on your screen and punch in your email. We do send out all of our free equity research every other Thursday to the group. There's about 2 years of archived research on there, so feel free to check it out. And this last week we wrote about something very, very important, the similarities between the perceived Fed policy mistake of December of 2018 and exactly what's going on right now. So yeah, scan the QR code, subscribe to our newsletter, and we'll see you tomorrow. Professor Daddio, Zozo Bob, Colton Manning, UniJ23, Susan, Sally, Arum C, Hang with Mark Mom, John G, Richard Vogel, Mike G, Brian Pro, Middle Age Grind, Steve, all of our moderators, MD, Hawaii, Sam, New England Crypto. We'll see you guys tomorrow. Take care and good luck.